Good morning, traders. Welcome to this video update from Milton Prime. My name is Chris Forsick, and we're going to take a look at Forex and CFD charts on this 23rd of September. Let's get started, first of all, with this euro dollar. All right, so yesterday, of course, big FOMC statement, news event from the US, sending the markets up and down as usual. There was some up movement, then a down, and recently, earlier today, one day after, we are seeing a bounce as well. Price is in I would say, a little bit of a tough spot because obviously there's a lot of bearish momentum, but price is also still respecting the 88.6 Fibonacci retracement level at 117. So it's a little bit of a tough, hard rock here at this moment. Will price ultimately break through this support zone for a downtrend continuation, or will price make that reversal and head up towards the previous tops here? At this moment, I think it's a too close to call sign. I was leaning towards a bullish reversal, to be very honest, in all the videos and webinars that I have done in the last 2 or 3 weeks. But so far, it really hasn't accumulated. It hasn't, we're not seeing that occurring that much. There were some retracements to the upside, but not a full-fledged reversal. And even this upside, I would not call that. That's certainly some bullish price action, but not yet the full reversal. So certainly not showing what I expected yet. And for me to call that a reversal, I would like to see today's daily candle close very near the high, and preferably as high as possible. If it engulfs the previous candle and closes, or at least the high is above 117.55, the high of yesterday, well, that would certainly change perspectives, and that would be a very strong, in my view, daily candlestick pattern, and that could be used for a bullish reversal. There's some argument for that to be a bullish reversal. At this moment, it's not enough to confirm that, and as long as it's not confirmed, that analysis is still questionable. All right, if that will happen, and certainly if it breaks through the 88.6 fib and the previous bottom, then we might be looking at a bearish breakout, and we could be looking at a bigger push downward first. So from that point of view, if on the hourly chart, for instance, there is a strong push lower like this, and the daily candle closes below 116.80 here, then in my view it's starting to look bearish, or it is already bearish, but certainly the confirmation is there. That's what I should say, and a bear flag and continuation lower is I think good. Even a bear flag here would have been good, but this doesn't look like a bear flag either. So that's why it's a little bit mixed signals. Because if we would have had a bear flag like that, it would have been good for downside. This is a little bit too aggressive for me and quite strong move up. So from that point of view, I don't like the bounce to the downside either here, because this is typical for momentum and reversal. So from that point of view, if there is a bounce again at 117 zone here, it could be a support level to reckon with for a move up to the top of the channel, if not all the way to the next resistance zone and maybe even further. Okay, we can dissect or we can split this zone basically in here and then in here. As you can see, there are basically wider and wider zones as price pushes through resistance up to the next decision zone. Okay, so I personally still lean towards a bounce, but to be on the safer side, basically the daily candle would be great to confirm that, and if there's a daily candle or break below here, then flag and continuation lower is, in my view, the best plan or approach for this euro dollar. All right. Pound dollar. Pound dollar broke through the 88.6 fib, made it all the way to the previous bottom, almost actually, I should say, roughly there, bounced, and is bouncing much stronger than your dollar. So from that point of view, if you look at the aggressive price action here, breaking above these tops, it's a little bit different story than the euro dollar. It's looking much more impressive, this upside, and the downside was kind of a falling wedge that we mentioned, I think, in our webinar on Tuesday, if I remember correctly, with Milton. Or otherwise it might have been a different webinar. I'm not 100% sure. But I mentioned a falling wedge, basically double bottom as a potential reversal pattern. So from that point of view, yes, that's happening. This has moved up quite a lot. I don't think it's a good spot necessarily right here, maybe, but retracement, head and shoulders pattern, inverted one, it could be good for an upside, or flag and continuation upside. It looks bullish. Now seems to be a little bit too late in my view. But considering the strong upside on the pound dollar, usually speaking, euro dollar will follow suit. So I think that the bullish breakout is, or reversal, I should say, is aided with this pound movement, and the euro dollar probably will see the same. Now with the pound dollar bouncing above this bottom, the bigger triangle pattern is still potentially possible with an A here, a B here, and a C, D, E pattern. That's something I mentioned as well, and price did not break below the bottom of B, so that's still valid. This could still be a wave D, and price might be moving up for a wave E. Alternatively, this could be a B, C, D, E. So whether it's a bearish or bullish triangle, a leg up and a leg down is expected, and then it depends on whether price breaks above resistance or below support for a bearish breakout or a bullish breakout. But the leg up or price swing up and a price swing down seems likely at this moment. And looking at this aggressive price action, that's looking pretty good on the daily chart. If the daily candle closes like this, then it's not a bullish engulfing twin, but very close to it, and certainly a very bullish candle with the close would be above these daily highs. Let's see if it closes like this or something similar. That would be a very bullish signal. This 4-hour candle, I think, is also important. If it closes like this, that would be another good factor for the bulls. I think that daily candle or a 1-hour flag or a 4-hour basically retracement maybe to the 23.6, 38.2 fib should see a follow through up to the minus 161 point target at 138.50 as long as it stays below the bottom here at 136.24. This is bullish territory now for a move up. This 4-hour candle is not closed, so if this candle closes higher, I would move the fib up to the high and adjust the fib accordingly. But this is so that depends on how this 4-hour candle closes with what high. As you can see, it's still pushing. As it stands now, this would be the fib. If it's a higher high, I would move the fib to that high. Okay, that's how I see it at the moment. With basically some bullish bounce and pressure, I think, and reversal is still likely, even though the downtrend was so strong. All right, dollar yen made a bounce up at that support level again, double bottom at the inverted head and shoulders level, and making it upwards now to the top. It's halfway to range. A better play would have been at the range, at the bottom of the range, or at the top of the range. Bottom of the range worked out well for upside. Now it's halfway. I don't think that's interesting. But it needs to break above this or below this, of course, for a bigger breakout. Hasn't happened yet, though. Quite boring chart, in my view. The US 30 was in a very big retracement. Of course, uptrend obviously there, but since it broke below this support line, and then this support zone, it made it all the way back to this support zone in basically almost a three-wave movement. 1, 2, 3. One here, and one here. Three pieces of this decline, I should say. And it's reverting back up with a pretty strong daily candle. Yesterday, engulfing twins. Today is seeing a follow through. No, was that today or yesterday? No, that was, I'm getting mixed up here. Yeah. So, or yesterday, I'm not sure. Anyhow, doesn't matter. It's reaching resistance. It reaches basically an ABC pattern. The first resistance zone, now inching higher to that next resistance zone, which was the triple bottom here and the resistance trend lines. So losing a little bit of speed as well on this way up. Looking at the 1-hour chart, I would be more inclined. We already had a higher low, which was a great spot when it retested that bottom and bounced. But I would be more inclined to wait for a flag on the hourly chart, or even 4-hour chart, or another higher low before looking for continuation rally up to the next resistance zone. This is too heavy of a resistance in my view, for any trades. For upside, downside I think is a little bit too risky in my view, considering the quite strong bounce to the upside. Same is valid for DAX. It too bounced its support as we had on the chart. Pretty strong, reached resistance, broke above that, reached the next resistance. And here too, I would rather see some kind of retracement and bounce before doing anything. That's my view. Bitcoin respected the 50 fib, made a good daily candle yesterday at the 50 fib and the support zone. The support zone was for these previous tops, resistance levels that could now be support, and that's what happened. ABC pattern therefore probably completed. If it breaks through the 50 fib, below the 50 fib, then we're looking at a bearish pattern. If it stays above this 50 fib, I think it still could be bullish in a wave 1, 2, 3, 4, 5 fashion. And it's back at resistance, of course, previous bottoms. So there could be a retracement, a test of the low. If there's a bounce at a higher low, I think that could provide some extra support and extra reasoning for an upside to test the next resistance zones up in here. Same for Ethereum, really. Went a little bit deeper to the 61.8 fib, but same bounce, same higher low, and bounce would be good for a rally up in my view. Amazon making that bounce at the 61.8 fib after what looks like an ABC pattern. Bounce has been slow, but there are bullish candles, and I think that there is argument to be made for a potential continuation higher. This is looking a little bit corrective, so a clear break above of this kind of mini resistance would be good. Or if it does make a retracement lower, the 78.6 fib could be a good bouncing spot as well. Upside, I think, targets at 3647 and the previous top at 3760-ish. XAG did get the bounce at that previous support zone, as indicated on the weekly chart. There was plenty of support with the bottoms here in the consolidation zone and the bottom of that range. Price making a bounce, a little bit on the slower side perhaps, but still making a bounce. Didn't get quite to my target that I had in mind at 23.45, and seems to be losing speed already. So the bounce is nothing spectacular, to be honest. And if it breaks through this support trend line and channel, it might be breaking a bear flag. So any trades here moving to break even or below these lows, moving the stop loss there as a trail stop loss, in my view, would make a lot of sense. Because otherwise the bounce up doesn't look that great and seems to be losing speed already. So, of course, there could be a higher low and a bounce up, I'm not saying. But I wouldn't take a risk on the silver. It doesn't look as convincing in my eyes. Gold getting an inverted head and shoulders pattern, left shoulder, head, or right shoulder. Bounce has not been that convincing either, but seems to be a little bit better with the 4-hour candle now showing bullishness again after a rally up, correction, and bounce. And probably a break of this resistance trend line would be good. Above that for a potential bullish breakout up into this zone right here. With target at the previous highs, I would say anywhere between 1820 and 1830. And Euro did get the bounce at the support trend line. Here, made a higher high, reached the top of the channel, then made another retracement back to the bottom of the channel. This channel playing out very nicely, making a bounce. But that bounce was not able to make a higher high. Ultimately got a head and shoulders pattern on the hourly chart and then broke through the channel to the downside, reaching the next support zone. So, yes, as you can see, we were looking for a potential reversal here, but I was also indicating that this is still a channel, active channel. It could easily bounce, and that's what it did. And now we got a better break, I think. And the uptrend channel is over for the moment. And this particular price pattern is looking certainly more bearish than when price was here. Big difference. So anyone at the top of the channel or the head and shoulders would have been pretty good off with those trade ideas. Otherwise, at this moment, right here, right now, and if with those trades, taking profit or moving stop loss to protect profit or reduce the risk, certainly making sense there. But at this moment, I would rather wait for probably a flag pattern on the 50-minute chart and a follow through of that pattern, a break below that pattern to the downside. Targets, well, oh, hang on. Targets are not too far away, unfortunately, with 50 and 61.8 fit pretty close by. So that's still a risk factor there, I think. Although I do believe that if this is probably will break through that, going to the double bottom. But yeah, I can't ignore that either. So it is certainly a level to reckon with for the downside. And if it's a mild reaction, more continuation lower is expected, like that. All right, at least to the 78. But yeah, 50, 61.8, still a very strong support zone. All right, those are my 2 cents for the moment. We'll be back hopefully next week, and wish everyone great trading. And above all, of course, trade safe and have a great day. Cheers, bye bye.